Good day, guys. I'm sure you've seen some of our live videos on TFC's Facebook page, and yeah, it's because we are in lockdown, and that's why I'm doing some live videos with Chung every other day, more like every day so far. And yeah, there's some things that we talk about that I thought was pretty interesting, and I know not everyone wants to see through the whole live video, so I decided to chop up some of the pointers so that if you are interested in a particular specific thing, you definitely can make this easy for you. So yeah, I think one of the main topics that people are very interested at this point in time is what's happening in the stock market. What are interesting things that we're gonna find? What are some things that I'm looking at? Because I'm sure I buy a little bit of stocks in the stock market, and while I do not claim to be a professional, I'm quite an enthusiast. So yeah, I have some things in my radar, and we did talk about some interesting stocks, so I'm probably gonna chop it up into like 2 episodes so that it makes it easy for you to understand and we all can learn something useful. But before that, Chung has something to tell us.
We are not any sort of professional advisors. We're here just mainly for entertainment, to share about our own thoughts and opinions. Nothing here is, it should be taken as advice of any sort. But feel free to do your own, diligence and all of that after hearing all of it. And as always, let us know what you think, or if there are any companies that you're also interested in looking into, let us know.
And you can imagine my reaction. I said, no, we are just entertainment. But yeah, in some ways, we are entertainment. And I just hope we can be a little bit more than entertainment. I hope we learn something useful. And if you want to see the whole video, go to TFC's Facebook page, TFC, The Financial Coconut Facebook page. And if you are enjoying what you're hearing, support us on Ko-fi, ko-fi.com. Everything is in the description below. I hope you learned something useful, interesting. So yeah, let's move on to the live snippets.
Cool. All right. So stocks this past week has been quite a roller coaster. I was actually kind of curious as to, are there certain companies that you are interested in talking about today?
I think let's do some tech companies.
Tech?
All right. So
Sure.
I think there are some growth tech companies that are pretty good.
Actually, before we even get to tech companies, so the challenge is, as someone who's trying to pick up the value investing type of framework, right? You really focus on understanding the discounted cash flow, right? And kind of coming up with a value based off that. With growth companies, tech companies in particular, most of these guys are very, 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 very negative, right? But at the same time, companies like a Tesla, for example, have gone from 200 to 800 in 2-3 months. I
think there was this.
What's the justification for something like that?
There's no justification for something like that. When you look at a stock, you need to realize that there are 2 components, right? One is the stock price, one is the underlying business, right? So I think that is where a lot of fundamental investors we look at, right? We look at the business rather than solely just the price or the price movement, right? So when you look at companies like Tesla, which are growth companies, trying to benchmark a market, trying to disrupt a whole market.
Yeah.
The challenge comes as to how do you value something like that, right? And yeah, it is super complicated. A lot of your DCF models, they don't really work unless you separate it out, and that will make the whole. Okay, the problem with DCF is that, how do I put this? The problem with DCF is it can be oversimplified. These days, a lot of people are too simple about it, right? It's just you just plug some numbers and then there's this magic number that comes out at the end, and then bam, okay, that is the price that you buy, or that's the price that you don't buy, or whatever, right? So the challenge with that is that you look at all these big banks and big financial companies, they hire a whole team of people to analyze companies, right? They don't just use one formula to do this. And if the model becomes too complicated, which means I'm assuming that Tesla goes from negative to become profitable, and then I'm assuming that they will bring down their cost of production because of scale, and then I'm assuming that they will continue to rise at 20% or 30% sales year on year because of expansion in China. I'm basing off three assumptions.
Yeah.
All right. So then that makes the model super complicated because I need to hit point 1, point 2, point 3 before the whole thing works. All right. So when you're investing in growth companies or investing in, disruptors, then there is a good amount of faith that needs to come in this game. Yeah. And
Yeah.
most analysts are super biased in this game, right? So you have analysts saying that this will be like $6,500 stock, right? I think Tesla. Someone was saying that $6,500, and you realize that the people that are most extreme, they get onto the media, right? They go on the news. The news, they invite them and they talk. So that is the game of the news, right? The business of the news. So when you look at it objectively, sometimes I really question how do they like project 6,500. No, they don't really publish like a full report, talk about their breakdown, and because a lot of things like PNC, right? So yeah. Personally, I'm not a fan of Elon Musk. I don't like him because he always says this and he like delivers this, right? So it's like always under deliver, over promise. You can say that Tesla is a revolutionary company that is doing, new kind of cars. So be it, right? If you're a believer, go ahead. I'm just not a believer. I think there are other better places to deploy my money. Right? Ultimately, you choose where you're comfortable. You gotta understand the business, and you gotta do what you gotta do. Yeah.
Okay, well, like I guess that's a great segue to what's one of those tech companies that you are comfortable with? Let's pull
TTD,
that up.
man. TTD, the trade desk.
Oh, explain to people what the trade desk is about.
Essentially, it's an integrated advertising platform, right?
Okay.
So you realize that these days there are like tons of ads all around, right? That you can advertise on the games, you can advertise on like TikTok, you can advertise on like Snapchat, Twitter, everywhere, right? So most big companies, so small companies will try to do everything on their own, right? And they're not the main kind of people in this business anyway. So then there is the other two bunch of people, which are your advertisers and your huge ass companies that advertises a lot, right? So your advertisers, they can be taking on small projects from all these different companies, mid-sized companies that want to advertise but don't have the expertise to do it. So then they get an advertiser to do it. Or they can also take projects from big-ass companies that, want to engage them professionally to do their thing. Or you can have big companies that have a team in-house to do all the digital marketing outreach and everything. But the complexity these days is very significant because it's no longer just Facebook, no longer just Instagram, no longer just YouTube, right? So TTD does that one-stop integrated platform where advertisers can go in and just kind of buy all sorts of ads, right? So it's this integrated platform. Essentially, that's what it is, right? They don't own advertising assets. They just kind of, build this platform for you to make advertising easy, right? And in the advertising community, in the branding community, it's like the top 3 platforms. Many people are on the platforms, right? And they're growing, fast growing, and I think they have like minimal debt. The last I remember, you see revenue per share trending up. That's good news. You see revenue continue to grow very significantly, actually. Right, so it grows at about 40% a year. Right, so that is super exciting, 40% a year. And they have no debt.
Yeah, no long-term debt.
Yeah, so that's good. I usually only look at long-term debt because short-term kind of liquidity leverage is no big deal because the long-term debt is what usually sucks up a lot of percentage in terms of companies, right? So average they pay about 7% corporate debt rates. Depend on the health of the company, depends on what kind of rates they can get from the banks or from institutional investors. It's a complicated thing. You can read through the financial statements to see it, but I think very important, we got to look at the absence of long-term debt. That means that the company is not taking on massive kind of loans and debt to expand or do M&A or to grow their business, whatever. So that's very good, especially in a time like this, right? In a time like this, I think TTD will shine. You will see more and more people trying to be more effective and more efficient with their advertising dollar. They will probably run less, huge ads like bus ads or like banner ads. They will want to be more targeted, community driven. So you should see advertising move more and more towards a digital front. And with this whole like Corona thing, more and more advertisers will go digital, and more digital, more ad dollars will go into the digital ad space, right? And I think there are great business in this part. Yeah.
Cool. Awesome. Yes. So just for those who might be just joining us, please note that this is not professional advice of any sort. We are just doing this for entertainment purposes because everyone's kind of stuck at home. So nothing better to do.
Yeah. I was just planning to record some new episodes, and then you're like, "Oh, let's go live at 12." So, "Oh, okay, let's do it." Yeah.
And for those who are also joining us from different channels, so our primary channel right now is the Facebook group, Personal Finance, blah 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 Malaysia, or Investing in Personal Finance Malaysia. But we are also live on a few different pages. So if you are messaging on pages or on YouTube, we can still see you here. So please keep us, just please keep up with us here and let us know what your thoughts are.
Someone's asking, you were using FA to analyze the stock, which is great at telling what to buy. What do you use to figure when to buy? That is the question, right? So I think the challenge with evaluating growth stocks, okay, it'll be much easier if the company is like huge, right? And you can use PE ratio, you can use DCF. A lot of traditional valuation models, they work when the company is big, right? If you're evaluating like Coke, Nike, Starbucks, these companies are huge, and you will very unlikely see them grow massively, right? Maybe they will try to grow in other ways, like Starbucks is trying to go FMCG. They are trying to do like bubble tea kind of structure. If you have not found out, Starbucks, I think they're doing a Starbucks Now or Starbucks Go kind of brand. Just go and check it out. They're trying to emulate like Tea Life, and they already started in China, right? So in due time you will see them appear in every part of the world, and it will be it's a great remodeling of that business, because they are actually trying to do more delivery, right? And small businesses, small outlets allow them to do that part. So they lean down their menu and set up something like a bubble tea shop for Starbucks, right? So these kind of growth potentials are interesting, but they already have a big base in their business. So it's a lot easier to evaluate them with DCF, discounted cash flow, or like PE ratios for these kind of companies. For growth companies, it's a big question mark. How do you want to do it, right? So the best bet will be mostly to just try to buy when it's cheaper, when the market is like half at this point in time. I think it is okay to buy at this point in time, right? But that doesn't mean you buy everything. I think the challenge a lot of time is to how much do you buy, right? So at what point in time do you buy, and is that the only buy, right? So if you have $1,000 and you want to put it to TTD, you can put $300 first, and then you observe and you see that they're growing, and then if it's continued, it's good. You can add a little more, right? So some people use price to revenue, price to sales. Depends on how you look at it, right? But I come from the ground that I want to find a technology that has two things. One is it is so disruptive that you don't see a way of going backwards. You can only go forward, right? And number two is that there is a path to profitability, right? It needs to be profitable, right? And from that point of path to profitability, then we can look deeper into like how do you then evaluate the intrinsic value of the business. But a lot of models, they will crash at this point in time. They just don't work as well. Yeah. So a little good faith goes a long way.
Yeah, and I guess kind of adding it to like when to buy. I mean, the way I look or the way I'm planning my own money is I'm almost like unlocking a set amount or a set percentage every week in a sense, right? So similar to how you should always be like dollar cost averaging long term. You should like for things like this, you should also kind of be dollar cost averaging in a sense, right? Like this week or the first 2 weeks I unlocked 20%. Because there are definitely opportunities there, and I will only take the ones that have the opportunities. The rest of them are like, yeah, the rest of them are things I'm keeping an eye on, but I'm not actually acting on just yet. Right, and then next 2 weeks or whatever, if things continue the way they are, I might be like, okay, I'll let myself go out for another 20%, 20%, whatever it is, right? So I guess it's also like a function of time of having a game plan for how you're actually going to spend your money, and then knowing that for me, as more like trying to stick with the value investing type of thing, having like a clear okay, first hurdle is if you get to this point is potentially like, okay, I can start looking at like buying you, right? And then if you go lower, then I'll continue buying a bit more, and so on and so forth.
Yeah, I think there is it's almost impossible to time the market, right? And I think it's just very difficult to time the market. Don't try.
Yeah, and then the last question here, and then we can move on to maybe your second stock or company that you would like to talk to or talk about.
I'm doing anything differently with this market situation using SMA and EMA. What is SMA and EMA?
I think this guy's more looking at technicals, moving averages.
My money, but now everything broke through every support line. Support line. Okay, no clue what model to use. Okay, I'm not technical. This is something that you need to know. I'm more fundamentals. So I don't time the market. I was pretty shocked every morning when I wake up. It's like, 10% down, 10% up, 5% down. So every day it's like opening up a new present, right? So the good thing is I'm not technical. I'm not concerned about short-term day-to-day fluctuations. I do a bit of options, but yeah, not technical that way. I'm sorry, I can't help you.
Yeah. Cool. So that's kind of all the questions we have right now. So is there another company that you had in mind that you would like to kind of brief us or introduce us to?
Did we talk about Roku yesterday?
No. Roku.
Love that company.
Yeah. So this is actually one I've started, like it popped up on my radar maybe 3-4 days ago. But like I don't really know much about this type of industry. So could you kind of help me understand what this is about as well?
Okay, essentially all of you guys are online these days, right? We no longer watch cable, right? So no more Astro TV, no more those kind of stuff. Even if you use TV, you watch Netflix, you watch YouTube, all these different platforms.
Yeah.
Right? So you realize that streaming is becoming more and more of a thing. Everyone is going there for very good reasons, because you get to choose your content, you get to see what you want to watch, you get to skip, you get to reverse, you get to pause, everything, right? So a lot of control as to what you can watch. So that is good. And all the big boys are trying to come into the business, right? Disney is in the business, HBO, right? Amazon, Netflix is the giant in the business. So everyone is in the business of streaming.
Yeah.
And everyone is struggling with one thing, content, right? So content is very expensive. And you see, if you go to Netflix's financial, you see tons of bleeding. Although they're growing, but they're spending a lot, billions and billions of dollars. I think they spent 20 billion. There are 20 billion in debt, long-term debt as of now, just to fund all these, Orange is the New Black, all those kind of content. Clearly, I watch Orange is the New Black. Yeah, all this kind of content. And good that they're winning Oscars, but they're not making money, right? They're not like profitable in that aspect. So, which is why if you are trying to make money in the streaming space and you're betting on streaming as a business, I would think you want to look at something like a Disney, because Disney has tons of content, right? and they can do all those kind of stuff. But besides that content aspects of things, you realize Roku is an interesting spin-off from Netflix. Right? Actually, it's one of the co-founders, I think one of the earlier people of Netflix. He came out and he decided to build this whole hardware business, which is Roku, right? Essentially, it's like an Apple TV, right? Apple TV, so it's like Roku TV, right? But Apple TV only streams Apple stuff, and the Roku TV does everything. So it's like they integrate with everyone, and they have since pivoted into a platform kind of business, which means like anyone can start their own kind of broadcast channel, Comcast, or like a YouTube channel like TYT or BuzzFeed, or if they want to go into streaming, they can join the Roku platform, right?
Can we do it?
We just need to funnel a lot of content, right? So you need to be exciting enough. So the Roku platform allows all these kind of players to open up their own streaming channel, essentially opening up a Netflix without the whole technological infrastructure of setting up Netflix. So entertainment companies can do what they do best, which is entertain, and Roku will settle everything. Right? So I think that is where it is, right?
Okay.
And
how do they make money? And as a user myself, then or why would users choose Roku versus like Netflix, for example?
Okay, three things. So one thing is Roku used to sell a hardware device, right? Now they're integrating it with televisions. So 1 in 3 televisions in the market in the US have Roku attachment in it now. So you don't even need to buy the extra device. They already built the hardware into the television, right? So that's one thing, right? So I think more and more people will want to enjoy a larger screen at the comfort of a sofa, with it, whether it's a projector, whether it's television. We don't want to watch cable, but we still want to enjoy that kind of TV kind of experience. So yes, Roku is going down the hardware infrastructure line. That is cool. They will increase accessibility for all of us. That's nice. If you don't spend on Roku TV, you don't buy a TV, you can still buy the device. So that's one thing. Second thing is I think Roku has a subscription model as well, right? So if you subscribe to Roku, you get access to like Disney Plus, you get access to a lot of different kind of platforms at a fixed price. So Roku kind of integrates all these different platforms to come in, right? So that is good also for consumer end, right? And number 3 is Roku uses licensing, right? So they have all this tech infrastructure and they license that to all the different media platforms that want to, stream and make their own kind of stream network, right? And I think that is becoming a huge business. I think it was 70% growth. I can't remember exactly, but that is growing massively. And as more and more people are coming onto the Roku infrastructure, more and more content people are funneling through. So as more and more content is coming through the Roku infrastructure, then you'll see probably more and more people will sign up for Roku kind of subscription. Right. So and they're starting to expand overseas beyond the US. So I think that is it's pretty cool.
Okay. So right now, if they're not really doing any sort of advertising revenue either, or anything like that, right?
They do have some internal kind of like the other platforms that are on them. They can do ads.
Okay.
Yes, but they don't really make money from ads. Mostly streaming and hardware and subscription.
Interesting. Yeah, because I guess from just I don't really know much about the company right now, right? So I can't really say much. But I guess the way my first question, if they're going down a subscription route, the way I look at it is people will kind of choose their default entertainment, right? So for Disney, why would Netflix ever want to subscribe to or be on Roku? Right? Because then they'll be like, I'm not getting as much, or I don't have full control of the user, and now Roku has control of that user.
Good question. I'm not sure exactly how things work here in Malaysia, but in Singapore, there are a few telco companies. Like they sell like Wi-Fi or like data only plans, but they don't actually own the infrastructure, right? So they're just resellers.
Yeah.
Right. So I think that's something that we need to realize, that it's very prevalent in the market, because if you want to localize in the industry, you gotta work with the local people, and you gotta let the distributors make some money, right? That's a reality of, because it's complex in different local markets, right? And having that first mover advantage kind of helps in the business. You will also see Roku reselling to other people in different aspects of the market, right? That's kind of how it works. The ideal for a lot of direct to customer kind of businesses is everybody hope that they can actually go direct to the customer, so they can bypass all the middle people and then just suck out all the profits. But on practice, it is just not the case, right? Even a lot of enterprise softwares, a lot of a lot of digital platforms, they look like they're going direct, but a lot of times they're going to a lot of resellers and distributors, and there's a whole chain around it, right? So like it or not, this is not a one guy wins all kind of business, right? There was a short period of time everyone was like, Netflix is gonna kill everyone, Netflix is gonna kill everybody. But the reality is, some people like Netflix, some people like Game of Thrones, they go on HBO, some people like different things, right? And I think Roku has a kind of integrated hardware infrastructure and a kind of integrated licensing platform to allow a lot more media content to drop the cable and go on streaming. Yeah.
Okay, cool. Yeah, so that's one of those companies I'll be looking at over the weekend. Hopefully next time we talk about Roku, I can actually have a more intelligent conversation around it.
Cool. Happy to do that. Any interesting companies on your end? Have you seen any things that you're looking at?
Yeah, so TTD was definitely one of them.
TTD. Oh, sorry.
Let me actually pull up my little sheet here.
Oh yeah, I think a lot of people, there's always this discussion between index investing and picking your own stock.
Yeah.
Right. So I would think for most people, indexing is good enough. You get average 5 to 6% growth. It's good. You double your money in about 10 years, which is good. Don't get me wrong. But as you go along, if you are super keen on picking stocks, it's going to be fun and I think you can get a little more returns if you become pretty good at it. All right, so you kind of can
pretty big if though, right?
Yeah, it's pretty big if, and you kind of can do more integrated. So okay, a lot of people, they start with indexing and then they start to like add a little bit, like buy a little bit of Facebook, buy a little bit of Visa, buy a little bit here and there to like add on to whatever that they're trying to do. I, on the other hand, I started with picking stocks and I'm going to add some indexing. So because I start to see the value of broad-based kind of exposure. Like I want to get some exposure in Chinese market. I want to get some exposure in like maybe in the European market or the Japanese market. It may be, I'm not sure yet. And if I want to get exposure and I'm just too lazy to look at everything, then I could just buy some indexes that cover those markets and kind of grow and find opportunities in that sense. Right. So I think there is a room for indexing, and there is always room also for picking stocks. So see for yourself. There's too much of this or that, yes or no, in the retail investor space. I think a lot of times we got to look at what is the percentage. I think that is more important than absolutes. Yeah.
Mm-hmm.
Yes. Sorry. Back to you.
Yeah. So one company, I think we mentioned it before, but Booking.com is definitely my go-to at this point. So the reason I'm interested in this right now is because as we all know, the tourism industry has really been taking a beating, right? And so a lot of these companies have dropped significantly. Like we're looking at like 60 to 90% in some cases, right? Booking.com is not, or it's kind of in that travel space, but they're more of a tech play, right? And I think the biggest reason why a lot of these companies have dropped like 60, 80, 70, 80% is because they have a lot of debt, right? And when they have a lot of debt, it means that they have a lot of debt obligations, and that those debt obligations don't just disappear when you don't get customers, right? And so therefore, like a lot of these companies are actually facing bankruptcy. Booking.com, because they don't actually own any assets, they don't own hotels, they don't own physical buildings or anything like that. They have no real debt, right? And all they really are is like they're kind of like the Google for like booking hotels or booking trips or whatever, which is a huge opportunity. Like, you know, when people stop searching, like they just, you know, like I think their biggest expense is actually, you know, paying Google to advertise on their platform, right? But when people stop searching, then obviously their expense from that perspective also drops. And for me personally, like these guys are also sitting on, I think, $6 billion in cash.
Yeah,
which
super rich.
Yeah, and like they don't. I think their current liabilities, so everything that that's paid this year, as of last annual report, was like 5 billion or so, right? So they're still sitting on $1 billion in cash that they can easily take to, you know, buy out some of their competitors, right, and grow even bigger because of that. So yeah, like that's the one I'm really looking at. You know, they've definitely passed that initial threshold of, you know, it's time for me to, you know, I can start getting in. Of course, you know, considering it's $1,000 a share or 1,001 here a share, like, you know, I'll probably be getting like one share each time and just slowly like inch my way in. But I am hoping to really stockpile this guy if it goes down any further.
Yeah. I think a lot of people, okay, you're just talking about $1,000 a share, right?
Yeah.
So a lot of people have this misconception that, you know, a cheaper company, you know, it's good. You know, like it's very easy for $1 to become $2, right? You know, that is what a lot of people think, but that is not the case. If you play with pennies, you may lose your pennies, right? You want to find companies that have a decent size, a decent number, and you got to realize that it is priced at $1,000, but the overall company may not. How much is the valuation of like Booking?
48.35 billion market
Yeah, so
cap.
the whole company is worth 48 billion, right? It's and $1,000 a share is just kind of their decision to benchmark at a certain price, because at a bigger price there's lesser speculation. That tends to be the case. And there are other companies that are like very cheap. You know, like I have a friend who told me that like he buys those kind of super small biotech pharma companies. I'm like, oh my god, you know,
So I put up Bank of America here just for as you know, an example of much cheaper. So if you could just kind of continue your thought process using Bank of America as an example.
Yeah. So how much is the valuation, the BAC?
According to this chart here, it says 975 or 971 million market cap.
Okay, yeah. So what I was trying to say is the whole of the Bank of America is worth $1 billion. Like the company itself is worth $1 billion, right? And it doesn't mean that it is a better company or it is a worse company. It just means it's a valuated as a much smaller company, right? And it doesn't mean that like at $20 over, then it is easier to go to 40, right? It doesn't work that way. I usually want to look at like mid-sized companies, about $10 billion. I think they have room to double up, triple up. Not impossible. Yeah, at that kind of rates.
Yeah. Anyway, so that's definitely the one I'm most interested in. That's in the price range of, or that has fallen enough to the point where it's looking very appealing.
Someone asked, do you have like a watch list? Yes, I have a watch list. And why? Do you mean like why do I have a watch list? Because I just have a watch list. Huh? It's just kind of how I observe the market, and if I see something interesting but I'm not ready to buy for whatever reason, I'll just kind of add it to the watch list, and I will continue to look at it and see how things goes. Yeah, I don't mind sharing. I just don't know how to share. Yeah.
Yeah, I think just going to the why of having a watch list. If you don't have a watch list, you're being very reactive, right? It means you don't know if something, you know, what what opportunities are actually opportunities and what opportunities or what things are just like duds that are just falling, right? So by having a watch list, by preparing beforehand and having like clear ideas of like, these are the companies that I understand. These are companies that I have kind of a rough valuation of where I think it could be in the future. And these are the prices that I'm interested in getting into. Then when the news comes along, then you're not just like freaking out, trying to figure out, what do I do now, right? Is this the time to buy, right? Because you've actually taken that time beforehand to really understand what it is that you're going to be buying and when you will be buying it or what prices you'll be buying it at.
Okay, guys, I hope you learned something useful today. And yeah, these are some snippets from our Facebook Live during this lockdown period when we're all stuck at home. So if you enjoy, please go to our Facebook Live page, which is the TFC page, the Financial Coconut, to continue to catch us live every day. And if you enjoy this, you learn something, I hope you can share with your friends, people you love, and do share with us what companies are within your radar. But of course, remember, this is for entertainment only, right? We are enthusiasts, we're not professionals, and we're just sharing our thoughts. And if you want to support the channel, you want to keep us growing, please go to Ko-fi, ko-fi.com/thefinancialcoconut to support us. All links are in the description below. So stay healthy. I hope that this COVID-19 thing is over soon. I will see you around. Take care, guys.